Hi, everyone, and welcome to SEG's panel discussion, How Top Performing SaaS Leaders Create Sustainable Avenues to Drive Growth. I'm Karam Harami, Vice President at SEG. Today, we're so excited to have an exceptional panel of 3 SaaS leaders who have deep sales expertise and are here to discuss how to maximize value by optimizing sales and marketing. We're going to cover several areas, including best practices, common mistakes, and how a strong sales and marketing operation impacts other areas of a SaaS business and ultimately drives valuation. Our format today is a panel discussion. We will be asking our panelists about a dozen preset questions. That should take about 45 minutes, at which after we'll answer a few questions the audience have submitted. If you're inclined to submit a question, we welcome you to do so, and we'll do our best to respond towards the end of the session. You can submit questions using the Zoom app with the Q&A button at the bottom of the app. And it's my pleasure to hand this off to SEG Vice President, Austin Hammer.
Thanks, Karam. Good morning, everyone. Welcome and excited to have you all on for a fascinating conversation. At SEG, we're constantly talking with SaaS founders and executive teams. In our recent discussions, one topic has consistently been on the minds of a lot of operators: how to build stronger, more durable businesses to maximize valuation despite a volatile market backdrop. You may find yourself in this situation. The common criteria associated with a valuable SaaS business include strong growth, high gross margins, capital efficiency, and stellar retention. Most SaaS leaders are familiar with this dynamic, but many of you think it's less clear on how to improve these key metrics and in turn improve valuation. What's more, the functional area that may mostly impact these directly impact these core metrics isn't product development or customer support, but it's actually sales and marketing. Coincidentally, the area that we most often hear executives like yourselves express that you're struggling is sales and marketing. This presents a super interesting overlap. The area that is most often misunderstood by business leaders is one that, when executed on successfully, can most improve the value of a business. Sales and marketing success does a lot more than just grow top-line revenue. It scales gross margins efficiently, boosts retention, and trickles down to bottom-line profitability. We wanted to go straight to the source and host a conversation with current SaaS leaders who are tasked with the crucial responsibility of creating sustainable avenues to drive growth. Our 3 guests represent sales and marketing experience that spans the entire spectrum, from being on the founding team of a SaaS startup to leading sales for a public one and coaching businesses at every stage in between. We're honored and grateful to our panelists for volunteering their time and perspectives. Chris Crisco of BuildOut, Andrea Pitts of PTC, and Josh Schwartz of Growth Factors are phenomenal SaaS leaders and seasoned sales experts. They offer a myriad of unique go-to-market experience and insights, and they're generous enough to share some of those secrets with us today. So with that, I'd like to go ahead and ask Chris, Andrea, and Josh to introduce themselves in that order, and then we can get going on our conversation. Chris?
Good thing. Thanks, Austin. Thanks for everybody who's attending. I'm hoping to be helpful here today. My name is Chris Crisco. I'm the CEO of a high-tech startup called BuildOut. I've had the unique opportunity to be both employee and investor number 1 of this company. And throughout my journey, I've been involved in every aspect of our growth, from assembling our initial team to cultivating a trusted brand to securing early adopters and leaping this metaphorical chasm into the early majority. While the term go-to-market wasn't always in my vocabulary, I have effectively managed various sales and marketing teams throughout my time. And I've really seen the growth from that early stage startup to bringing on a minority partner to actually going through an exit as well. And that train is still rolling. I'm hoping to provide value here today. As I reflect on the past decade, it's really just been fundamentals that have been the key to our success. And I'm going to share some of those with you today.
Excellent. Thank you, Chris. Andrea?
Great. Thank you, everyone, for joining. My name is Andrea Pitts. I'm the head of global sales for PTC out of Boston. I lead the sales division that includes our cloud native solutions that includes complex applications for discrete manufacturing companies. And I really have been able to experience in my career being part of a number of different types of organizations, primarily in the application space of complex products, complex solutions, and really have been in the cloud since about 2004 or so. I was part of the Arena Solutions, which was purchased by PTC. But prior to that, we were venture-backed. We started out VC-backed, and then we moved into PE-backed. And that PE-backed and that experience brought us then to be one of the largest acquisitions by PTC, which was very exciting. And that was about 2 years ago. So that's the experience I bring, and hopefully I'll have some interesting things for you to take away.
Excellent. Thank you, Andrea. I have no doubt that'll be the case. And then Josh, last but not least.
Oh, definitely least. No, thank you, though. My name is Josh Schwartz, and I'm an operating principal, and I lead the sales acceleration practice for Growth Factors. And Growth Factors is the operating arm of Burgal SageMount's $6 billion private equity fund. And as an investment fund, what SageMount philosophy is a 3 and 3. So what that means is we're trying to triple the valuation of a business in 3 years. And my role in that is to help identify those growth levers and to help the leadership team at our portfolio companies really execute on those. So I've been with Growth Factors for just under 4 years. And previous to that, I held roles from being an SDR to an AE. I also managed and led a 75-person sales team at a $100 million private equity business, and also built my own sales events business with Sales Hacker as well.
Excellent. Thanks, Josh. You guys have a great background, so I'm super excited. So let's go ahead and get into the Q&A here, and we'll try to match the intensity of Eye of the Tiger, but no promises. So Josh, let's start with you on this one. So to you, what does go-to-market strategy mean in your role, and what is the most critical aspect of a go-to-market strategy? Yeah,
and I was just telling everybody behind the scenes that that song was really getting me hyped up, so I'm happy that was our intro song. But to me, the go-to-market strategy in first is really understanding your target market, the personas, the jobs to be done. And then from there, we can do research on our total addressable market to build messaging that's going to resonate with those personas, and then creating a pricing strategy to sell to those folks. So really, in short, it's really 4 bullets. It's understand your market and personas, develop messaging, and then what's your reach out strategy, whether that's inbound, outbound, or a mix of those two. And then last thing is just, you got to give them something to buy. So those are my 4.
Awesome. Love it. All right, let's go over to you, Andrea. What about you in your role? What does a go-to-market strategy mean, and what's most critical? I'm
going to say the F word, focus. Focus. I would not have said this 7 to 8 years ago. That, prior to being PE backed, we didn't have a lot of focus. We sold anything to anybody, whereas it didn't matter. But then what we learned was focus was key. Focus in market segment, focus in industry, sales motion focus. We were tasked with doing that very early on, and the results were pretty amazing. We'll talk more about that later, but focus.
Love it. All right. And Chris, how about yourself? In your role, what does go-to-market mean, and what's most critical?
I think the team covered it fairly well. Beyond value proposition, target customers, your pricing model, distribution channels, and your team structure, I would just add sort of the old phrase, culture eats strategy for breakfast. I think with go-to-market, it's never more accurate. And your go-to-market can't just be a strategy. It has to be in the team's blood. And that's the challenge of your go-to-market leaders.
Yeah, it's a great point. It has to be, ingrained throughout the entire organization. So, all right. Well, Chris, second one here, coming right back to you. As with building any team, hiring the right people is critical, especially when you're talking about culture. What are some of the key skills and competencies for a successful go-to-market leader, considering that you yourself have been one and now have a couple solid members on your team doing the same?
Sure. So what I would say more than anything is it's completely contingent on what you have and your personal skill set. Are you a great brand ambassador? Then get yourself a pipeline and funnel expert. If you're a financial whiz, but you don't know anything about the market, you're going to need yourself, this connected Rolodex, somebody that's kind of been there and done that the way I have at Build Out. Are you a product whiz? You probably need a great marketer and so on. So it really depends on the portfolio of skills you already have in-house and, really what you need to supplement with. But most of all, I would say be honest about your own strengths and your own limits. Just kind of giving everybody a peek under my hood, my personality profile. In terms of autonomy and non-conformity, on autonomy, I'm probably in the 99th percentile, and in non-conformity, maybe the 99.9%. And that can be great when you're trying to, build something that's never been done before. But especially in a private equity-backed company, try telling your board that you don't have a plan. You're just going to figure it out, right? You need to be able to understand who's around you. And I've been really blessed to bring on an incredible head of growth. Her name's Helen Calvin. She'd be excellent on one of these in the future. Super complimentary. It's like I could be me and do what I'm great at. And she is really just kind of like the backbone of our revenue org.
Excellent. No, that's great wisdom, right? Know yourself before you start hiring. And I think that's something that's spot on. So Josh, as a follow-up to you here, and kind of piggybacking off of Chris, do you have any tricks on how to best find talent to fill some of these roles? If you're looking to build out an organization, seeing as you've done this a lot in your career?
Yeah, no, I'm really lucky to have some good perspective here. Part of our services that we provide, one of our key pillars at Growth Factors is actually called talent leadership, which is recruiting. So we've hired over 100 people each year for the past few years into our portfolio companies, everywhere from SDRs to CEOs and everything in between, engineering, product, you name it. And I think really the core to that is what we start with is like building a scorecard. And that piggybacks off of what Chris is saying, is like really knowing yourself and like, what gaps are you trying to fill with this hire? And then secondarily on top of that is like, what initiatives do they need to be working on? And what you have to do is build a scorecard that says like, this is exactly what I'm looking for. So for example, if you're looking to, build out, an SDR org and you've never done that before, well, somebody else that you're going to hire better have done that, because they can skip the landmines. They can, get through the issues and problems without you really knowing what to do. And you can trust that person to go out and get that done. And that way, Chris can run in full autonomy while this other person is doing, that type of work. Right. So I would say just, start, with yourself, be honest, and then build out a scorecard. And then the rest of the process should align to that. Mm-hmm. And it should be like, what questions are you going to ask to uncover those things and get really just deep alignment there. So,
yeah. No, that's great and super helpful. Thanks guys. All right, on to the next one here. And Josh, I'm going to start with you on this one and then kind of round robin to everybody. We all love data. So what are the three sales and marketing metrics that SaaS companies have got to be tracking as their North Star metrics from a go-to-market perspective?
Oh, and this comes from, evaluation side. And, but for me, it's net retention rate. Is number one. Number two is sales velocity, which a lot of people don't know what that formula is, but it's number of opportunities multiplied by your win rate, multiplied by your average deal size, divided by the sales cycle time. So it gives you basically the amount of dollars per day that are coming in. That's one of my favorites. And then last is CAC to LTV. Those are my three.
Love it. All right. Awesome. We'll go over to you for this one, Andrea. What about you? What are your three metrics you're always keeping on top of?
It depends on the audience. On a weekly basis, I do a forecast about the business unit that I manage, and the executives are interested in bookings, gross retention, and net retention. So we spend a lot of time on that, and I track that in all different sorts of ways. However, I also am individually meeting with each of the teams, and from that point on, I'm very interested in conversions from top level funnel down to initial opportunities that get into discovery to proposal and so on, because we know the conversion rates to close in each of those sales stages. So we watch those metrics very, very carefully. And of course, ultimately the close rate. Boy, is that an important one as well, because those are areas in each of those different conversions where you might be seeing some decreases and trend. You can really attack that and help bring those numbers up. We pay a lot of attention there.
That's great. Yeah. And I love, the retention aspect you both raised, which on the surface is not quite as obvious as a go-to-market metric. And I know, Andrea, we've got a little bit more to talk about that later. So I'll bite my tongue for now. But Chris, how about you? What are the kind of North Star metrics you guys are keeping track of, or your approach to tracking metrics?
Yeah, I'll give you two sort of repetitive and obvious, maybe one novel. So CAC to LTV, pipeline conversions, and Josh and Andrea hit on those. But the not so obvious, I would say, is employee retention. Go-to-market jobs have some of the highest turnover in the company, and yet reps with tenure outperform new reps, in some cases more than 2-to-1. When managing a go-to-market org, you really need to know implicitly how much of your turnover is regrettable versus not. And what are you doing? Are you really putting your best foot forward every single day to retain top talent?
Yeah,
so that's
I love it. And that's an angle that I think often gets overlooked. So, all right, another rapid fire here. And maybe Andrea, we'll start with you on this one. We talked about metrics. How about a few sales and marketing tools and resources that SaaS companies need to be using?
Yeah, one is simple. You need some sort of forecasting tool, right? Salesforce has some pretty basic stuff, but there's others out there. But one of the things that was most interesting to me and a lesson learned was a modern BI and analytics, so business intelligence tool, which comes with a data mart and a whole bunch of what might seem like complexities. And back in the PE days, we were really conscious of not really having to spend or not wanting to spend the money in that particular area because that's going to affect EBITDA. So we, but now knowing because we have that now at PTC, I have at my fingertips so much analytics and so much of trending data that allows me to see very quickly if we're testing a particular motion, if we're doing something interesting, I can see almost immediately what the trending marks are. And in the past, luckily I had someone that was brilliant with pivot tables and exports from Salesforce, but my God, the amount of time spent, we could have had the solution and the answer so much earlier. So I am now a believer, and for me, a modern BI and analytics. And now the good news, 5 years later, they're not as costly, and there's a lot of them out there. So that helps as well. But boy, shoulda, woulda, coulda on that one for sure.
Oh, I hear you loud and clear. Chris, how about yourself? I know you've got some interesting thoughts on this one, but kind of tools or your philosophy as it relates to tools for go-to-market operations?
Yeah, I'm not going to pretend to know how to use these tools as well as Andrea and Josh do, but I'll just provide a couple guiding principles that, we use at Build Out and that are important to me personally. I would say first, perception is reality. So, don't be cheap on your customer facing tools. Zoom and DocuSign are to webinars and digital signatures as Kleenex is to facial or nose tissue. It's like, I don't know if you guys are like me, but when I get an email asking for my electronic signature with like echo sign, I judge that company super hard. And I know I can't be alone in that. I'm like, man, I can't cost that much more to just, get DocuSign and make everybody feel comfortable. The second one is just understand what you're trying to do before automating it. Andrea hit on like the BI tools. I'd say, what are you trying to measure? What sorts of things are you trying to pull out of it? In this day and age with SaaS companies kind of out the wazoo, if you will, they're popping up every day. There's so many nice to have products out there, and we're trying to use these as a crutch to do our jobs for us. A lot of these tools can be really helpful, but I'd say understand what you're trying to do, engage manually, and then go evaluate what the best tool is in that category that can help you get those insights.
Yeah. No, that's great. The old saying, garbage in, garbage out, right? If you're going to automate, you got to know what you're automating. So, and then Josh, how about you? Anything you can add on kind of the best tools that leaders should be using from a tracking perspective?
Yeah. I'll just add on to Chris's point here to engage manually. I don't know if you've ever, used a sales engagement tool like SalesLoft or Outreach or whatever, but if you try to send as many emails as you can out of there, you find really quickly, how powerful tools like that are. But I'd say from a tools perspective, my favorites are always the basics. And that's why you'll see companies out, like a lot of companies in these categories for sales and marketing technology. But number one for me is always contact data and information. Mm-hmm. Who has the best, the cleanest email addresses, phone numbers, specifically cell phone numbers is what I'm looking for, because there's so many people that don't work from the office anymore, or they're mixed, they're hybrid. Mm-hmm. And, if you're a sales rep, like it's the difference in how many dials it takes to get a hold of somebody and how much time you're sitting there, when you're prospecting. I think that's huge. And then my next piece is intent data. I've absolutely fallen in love with intent data over the past few years. At first, I was a little bit questioning it, but then I saw the power of it over the past few years. So what that does is that you pick a topic or multiple topics, and then it tells you who out there in the internet is searching for that topic. So you can pick out, a couple pain points that you solve and know which companies and which people sometimes are actually searching for that at those companies. If you can match that with your ideal customer profile and then run campaigns on that with marketing and sales, going at those together, and you have good contact information, email, cell phone numbers, it's dangerous. That's a really good way to go find, people that are actually in a buying cycle right now. So if you sell something and they're in the middle of a buying cycle, that's what intent data is for, because usually of your market, there might be 3 to 5% of your accounts out there in buy mode. And you want to know who is in buy mode right now. And that intent data will give you that. Yeah,
that's an excellent point. Great. All right, Andrea, this one is for you. And Chris put it nicely, there's SaaS companies out the wazoo these days. So in an increasingly crowded marketplace, how do leaders articulate the differentiation of their product offerings and identify how to best position against competitive offerings?
Yeah, I love this question because really it gets down to customers. And Chris and I have talked about this. It's all about the customer stories that are going to resonate with your focus markets, your ICP that you're going after. No one wants to be first. They really don't. Those early adopters, they don't want to be that, especially if you're going to highlight them. But it's critical to align the stories with the personas of your focused market. So you should have, if you're probably going to sell to, if you're doing multi-threaded selling, you're going to have different personas you sell to. You should have different customer stories. And the business value that they drive is just going to be a major, or going to have a major impact on your business. They're really your best marketing story, your best marketing source, because you also want to line up lighthouse accounts. If I was in Chris's organization, I would find large organizations and I would get Chris on the road because those lighthouse accounts, typically you're going to make some love connections at the CEO level, at the C level, because you might even have to buy that business. So you need Chris's approval anyway. But that's what I would do. And that's what we do today is we really rely on our customers to sell us. And sell our solutions.
Yeah. And that you raise a great point. And I think it's a theme that will come up again and again and again in today's topic, which is knowing your customer really well as the springboard for a lot of these things. So awesome. Okay. Another rapid fire here, just quick off the cuff answer. We'll start with you on this one, Josh. So a few areas we often see as sales and marketing improvement opportunities for SaaS businesses are either 1, segmenting the market or customer base, 2, splitting out the sales team to be divided between new business and existing customers. And then 3, developing a digital marketing strategy. So if you could only pick one, what would it be and why?
When I first read this question, I was like, I'm stuck. And, I'm stuck in the middle between 2, which is I've, recently just fell in love with digital marketing. I mean, I'm just easy to get obsessed with SEO and PPC and endless opportunities to maximize endless amounts of data. And it's like truly fascinating. But the salesperson in me will tell you the impact is hiring the right types of reps in the right roles as you scale, having the right seats on the bus. There's such a huge difference between a farmer and a hunter. And if you have a bunch of farmers in hunter roles, you're not going to be able to maximize your growth. Those people do not want to make outbound phone calls. They want to let stuff come to them and they want to manage accounts and they want to make friends. And that's just not always the case. So I would say, the roles. I want to take the roles and I want to segment those for sure.
Excellent. All right, Chris, how about yourself? What do you think?
I had a hard time answering this because, candidly, I think they're all critical, but I choose one just because I think 2 and 3 are wholly contingent on it. So I would say segmenting your marketing customer base first. Yep. And then you kind of get into, how you guys split up the team and, divide into the new business and existing, as well as, what's your digital strategy going to look like.
Excellent.
I'd say one.
Okay. Love it. And Andrea, how about yourself? I know you could probably host a webinar yourself just talking about this topic, but what are you picking?
I totally could host a webinar on this topic myself. Segmentation, man, it is critical, and actually was the very first project that we tackled when we went private equity. Even before the deal was closed. They sent a Josh to us. Josh from our private equity firm. And for 4 to 5 weeks, we did a deep dive into segmentation, finding out all sorts of things, talk about data. But what we were able to do is then understand the segmentation where we best fit our ICP. And then we were able to align the rest of the organization around that. Segmenting our customers by the findings, changing our marketing strategies by the findings because of the findings, and focusing our sales teams around, the sales motions that we wanted because of the findings. So it was crucial that we did that exercise. And that basically dictated what we did from that point on.
Love it. Awesome. So, as I alluded to in the intro here, a lot of founders and executive teams are thinking about ways to build durable and valuable businesses. And it's often tempting to review the results associated with a sales and marketing investment purely from the perspective of revenue growth. But you guys know, and we at SEG know that growing efficiently and sustainably is critically important, especially in the current market environment. So I'm going to start with this one for you, Josh. What does efficiently scaling sales and marketing look like? And how does it benefit a company beyond simply growing revenue?
What does it look like? Scaling, I don't want anybody to get this confused. Scaling means doing more with less, right? So that's what that always means to me. And I had this discussion with, CSM and leaders like that all the time, like management leaders. It's I'll ask them the question, if I doubled the amount of new customers or tripled the ones that are coming through and you had no more heads to hire, what would you do? Right. So that's always how I kind of position that is how can we automate? And that's really scale to me. And I think the two most important things to really look at there, number one is growth rate. So to me, a good go-to-market has really good growth rates. They have good win rates. You have opportunities to go do upsells, into existing customers. And, there's deal sizes that also correlate with sales cycle times. I always say there's nothing like selling a $5,000 deal that took you a year versus a $10,000 deal that took you 1 week. Right. So I think those are the types of things I look for. And my last one is, and it's always EBITDA. EBITDA is always the sign, right? So when you can scale right, you don't need to hire those extra heads in customer support or customer service or customer success to go do more. Right. And that's definitely a big indicator for me. So those two, which also happen to be how your company is evaluated, by the way.
Yes. Yeah. Right. Exactly. So piggybacking off of that, Chris, you've talked about Rule of 40 a little bit. And again, on the surface level, it's not quite a go-to-market metric, but you think of it as one. So maybe tell us a little bit about what scaling efficiently looks like for you.
Yeah. And I would make the argument that perhaps this is more important now than it's been in a decade and a half or more. I think one thing that I'll just add in terms of the metrics, I can't agree more on EBITDA, on profitable growth. But keep in mind that go-to-market leaders or just folks responsible for sales and marketing, you can kind of lead the focus that Andrea was talking about at the beginning of the call. That focus throughout the rest of the company, when you're explicitly clear on where to spend, then that makes everything throughout the rest of the company really efficient, because then they know what to spend time and energy on. When you get into the Rule of 40, just want to make sure everybody on the call understands what that is, Austin. What you're really talking about is actually the two metrics that Josh was pointing out. You have your growth rate and your EBITDA margins. As combined, those are at least 40%. That's kind of an indication of a healthy and growing company. What I would say is, over the past decade or so, people were just looking for a rule of 40. you could have 30%, top line growth and, you have 10% EBITDA margins. Great. Or you could have the inverse. Great. Like both of those companies would trade. Today, that's not the case. Like there is such a heavy lean right now in the M&A world toward EBITDA. And when you talk about focus, when you talk about scaling, efficiently, when you talk about really thinking about where you're spending your dollars, it's really critical right now. So your business owners that are thinking about raising money, especially so hard for the early stage folks right now, Austin, that are trying to raise money, because it's like, of course you don't have EBITDA. Like right. You're trying to just grow, your top line, and but it's important.
Yeah, absolutely.
Yeah. I'll piggyback on that for just 1 second, if you don't mind, which is like, we were actually looking at some M&A deals for one of our portfolio companies, this year and late last year as well. And like, we're looking at some smaller organizations that don't have any EBITDA, or they're burning cash or losing customers from a net retention standpoint. And that literally will kill an M&A transaction, because when we take your company and put it into the other one, now all of a sudden that lowers their metrics and their evaluation. So it's this game that we're playing. And I think if you have the right retention and good EBITDA, that makes you a lot more attractive for M&A as well.
Yeah, absolutely. Yeah. And Andrea, I'm going to kind of cheat here and go on to the next one, because, I think your answer to this question dovetails really nicely on the topic of retention. A lot of companies are often surprised to hear that the next sale that they make could actually hurt their business in the way that it's valued, which is counterintuitive. But what we really mean is that selling to the wrong customers impacts all areas of a business negatively, right? Implementation, customer support, it can hurt product development, and it can definitely damage retention. So how can sales leaders analyze their customer base to ensure that they're focusing on the highest value customers?
Yeah, so I talked about segmentation recently. And what was interesting about that whole exercise is what the impact to retention was. It was probably one of the most critical findings when we did segment the customer base at that point. It was instantly recognized which portion of the base was bad for our business. Really bad. I mean, the retention rates were in the 60s and 70s. When it was our goal to get to over 90. Mm-hmm. And so it was those customers actually that ended up being outside of our ICP. They were not in our focused group. And it took us a year or so to weed those customers out. The one thing that we did do that weeded a lot of them out is we set a minimum ARR. So when they renewed, if they weren't at that minimum, they had a choice to make. They had to it was tough. Chris, you're clapping. It was tough, but yeah, it absolutely did. It weeded out the bottom portion, and it took us a while, but the results were pretty extreme. In the first year of our PE experience, we met our 4-year gross retention goal. Our gross retention goal was to get to 91 by year 4. We got there at the end of year 1 because of the hard choices we made. So it was critical. Yeah,
no, that's another one, Andrea, where I'm sure you could have a 5-hour discussion on, but it's an excellent point. Josh, as a follow-up here, you made a point where as founders are trying to scale, they need to win business to continue momentum. How do SaaS leaders strike the balance between making sales needed to grow, but also selling to the right customers? It's a tough question, I know.
This one's not fair. I don't know if I'm even really prepared to answer this question, to be quite honest. But I think I've seen it go both ways. I've seen where the ideal customer profile is too tight. I've seen it where it's too loose. So I think you have to give yourself some space to run controlled experiments, and I say like controlled experiments there. Like if you're going to go outside of the norm, outside of your niche, and you also want to make sure that like the entire go-to-market team is in sync there, because the last thing you need is like an SDR or one AE going out like outside of what your ideal customer profile is and spending a ton of time there and then distracting product and a bunch of other things doing that. So it's like make sure everyone's got a cohesive approach, to run those controlled experiments. So I say this is the most important thing.
Yeah, controlled experiments is I think is key, right? Is testing what you're doing and then diving in and with the right data. So I love it. All right, Chris, I've got one for you that's kind of specific to your background. A lot of operators in the current environment are still considering investment or an M&A transaction. And they may have a less sophisticated go-to-market, operation. Does that impact their ability to find a partner? And if they do consider, seeking an investment or transaction, how can they articulate the go-to-market opportunity they have, even if they haven't built out a super sophisticated function?
Yeah, it certainly can impact it. I mean, I would say, having seen both sides of that with the minority investor and then having a banker on, our exit to PE, I would just say, regardless of how smart you think you are, I highly suggest getting an experienced banker. Working with your team, with Brad and folks was an exceptional experience. And, we're really happy with our minority partner in Susquehanna that we brought on originally. So that ended up working out fine, but we didn't have a banker for that. I would just say, go-to-market clarity doesn't have to be this huge function, but it does require you to intimately understand your sort of spend to get. And what I mean by that is you have to have these micro tests, these micro evidences that will tell you, what are you going to be able to do with your business? If you spend X, we're going to get Y. Now, this is crucial when you're bringing on a minority partner or an outright exit. Yes, your business is going to trade primarily on where you are today, what you've done, and whether or not what I'll say is whether or not you actually close the deal, though, is going to be dependent on their belief in where you're going to go from here, right? So it's not enough to say, and then we're going to sell data. It's great. Have you sold data before? And then we're going to go into this adjacent market, and that's going to expand our TAM 10x. It's so you need to be able to demonstrate we can expand this way. We've experimented with this. And then here's your kind of key, right? In these meetings with your, potential acquire investor, the only reason that we haven't thus far is because, one, we're maniacally focused on the task at hand. And two, man, we've been waiting for you to come along so that we could do this together.
Yep. No, it's a great point. And I think I'm going to borrow or steal spend to get from you because it's such a great way to explain understanding what you need in order to get where you want to go. So that's incredibly helpful, Chris. Pivoting over to you, Josh. So you've seen SaaS businesses at every stage of go-to-market development. You've rolled up your sleeves on hundreds of businesses. What are the main inflection points that inform when it's maybe time to reassess that strategy, either increase spend, decrease spend, reallocate spend? What are you looking for in those organizations?
Strictly looking at sales efficiency metrics, I can talk, I swear. So those would be win rate for new logo, CAC to LTV, and net retention rate. So for example, your win rate on new logo opportunities is below 15%. You probably haven't found the right targeting or the right sales motion yet. It's probably not time to double down there. Is your payback period, from what you acquire a customer longer than the contract? That's another one. It's not quite there yet. Time to reassess. Now, on the other hand, if you've got a win rate at 20+%, you're bursting with inbound demo requests. Every single one of your sales reps' calendar is full. They can't even handle all the leads that are coming to them. It's time to hire more, and you might actually want to plan ahead of time for that. So I think that's a strange one, maybe not a metric, but I actually go to the sales rep's calendar. Are they busy?
Yeah.
So Andrew, you might even see that too. Yeah.
Yeah, no, I love it. Yeah, utilization is incredibly important. So agree wholeheartedly. All right, for the last few questions here, and then we'll grab one or two from the audience. Now we want to talk a little bit about maybe when things aren't going right, because as we all know, you talk about controlled experiments and investments. You don't always bat 1,000 on those. So I want to talk a little bit about what the most common mistakes that we and you guys are seeing SaaS companies make when they're trying to build out our go-to-market operations. So maybe let's start with you on that one, Chris. What are some of the most common mistakes that you see as folks are trying to build things up?
The most common one is simple. They forget how things feel from the customer's perspective. Mm-hmm. What might be the simplest process for you and the one that works the best for, getting all the, everything you want to measure. might be actually much more cumbersome for your customer than they were used to over the period that you've been growing as a company. You have to really see and hear your customer. My experience has been, this isn't a problem for early days in the business. In many cases, especially as you enter the PE universe, you sort of trick yourself into thinking great customer service is a process. And, one way to keep from the pendulum sort of swinging from like that maniacal customer obsession and do whatever they say to like, this perfect system is to just put some guardrails in place through the lens of like customer standards or values. We've done that at Build Out, and I could confidently say that we have a pretty cool balance now of understanding what's going on and staying true to sort of the spirit of the organization and being customer first.
Mm-hmm. Yeah, that's a great point. Yeah, remember how it feels. It's excellent advice. All right, let's go to you next, Andrea. Where do you see the most common mistakes as folks are trying to build out organizations? Yeah,
I see two. The first one, as you might imagine, is not making the decision to focus. It is not easy. It's the entire organization has to be on board. Everybody needs to alter how they go to market, do their daily business, because you need the organization to buy in. The second one is to just don't go cheap on sales hires. And you might think that, well, of course she'd say that. She's the head of sales for an organization. But I just know that time and time again, if you are battling to get the best people in place, you don't need to have a bunch of A stars. Oh my God, that's a nightmare for any sales leader, is to have everyone be the A. But you do need to have those grounded core sales folks that are really good, that you can trust. You can put your solution in their hands and they're going to go do the right thing and sell the heck out of them. So it might be a challenge for those of you that have leaders that come from maybe finance and product. They look at the OTE that you want to spend and they fall off their chair. So that's going to probably be your biggest challenge, but you gotta overcome that and get some good people in those seats.
Yeah, I love it. Thank you, Andrea. All right. And Josh, how about you? Most common mistakes, from your hundreds of companies you've looked at?
Even from personal experience, I would say this is always like not identifying your ideal customer profile or nailing your niche first. Like, it's so easy to stray away from that as you grow, as you acquire more companies, as you add more products, to like not do the difficult thing, which is to like take a step back, make sure that you have everything drawn up, that the right plans and the right attack strategy, because we can get lazy there, right? And not go and do all of those things. And then you can get lost in it in a myriad of other things that you have going on. And then you're asking yourself like, well, what happened? Why aren't we converting well on this product or this acquisition? And it's because you didn't stop to do the groundwork first. You have to have a good foundation. And that is always ideal customer profile, nail the niche, select the right accounts, and then go from there.
Love it. That's excellent. All right. Next question here. We're going to do a little bit overrated, underrated. So Andrew, I'm going to start with you on this one and pull a switcheroo, but I like your answer a lot. Where do you think sales and marketing teams overspend their time in terms of thinking too much about something or overanalyzing something, or it's just generally overrated from a sales and marketing perspective?
Oh, man, analysis paralysis. As much as I love a BI tool, you have to be careful because there's a lot of data and you can get mired down in it. I have this saying that I use all the time is 80% is good. It's good. Let's make some decisions that are going to get us to 80%. And then the rest of it, you'll learn along the way and you'll adjust and you make changes, but don't let data dictate absolutely everything before you make your decision, because you'll never make your decision. So that's my number one thing that I think people do, is they just constantly look for more data to make them feel better about the decision you're about to make. When 80% is good. Yeah. Start with that.
Love it. Love it. And all right, Chris, how about you? What's underrated? What are most sales and marketing teams kind of forgetting as you think about the basics is somewhere they should be spending time?
Underrated account management, overrated glossy tech. I really want to get a jump on something Andrea said that I think is really important here. This data piece, there is like an obsession with data. And my experience has been the bigger the company has become, the more everybody wants data to give you an answer to everything. And I've been really fortunate to work with the tech guru, just one of the smartest guys that I've ever met, who's my partner from Build Out. And he has a business principle where he says, never let a lack of data overrule your intuition. Never let a lack of data overrule your intuition. So much of why we're here, why so many of the people that are on the call, why your companies are successful, is because you just feel it in your gut. So, use the data if you can get it, but if you don't, man, you got to make the decision. Sorry, I didn't answer the question directly, but
no, great insight. Yeah. Okay, perfect. And then one other rapid fire, and we'll grab a couple from the audience. And I'll start with this one, Josh, for you on this one. Sometimes you got to know when to pull the plug. And if you're putting in resources towards something and you're making an investment and go to market and how do you determine when it's maybe time to pull the plug and reallocate that resource or figure out a way to go back to the drawing board?
Yeah, there's nothing worse than, spending, like making that decision to you only have 3 to 5 initiatives a year and you go and do it and it fails. How do you know when to pull the plug? I think that there's some anecdotal, pieces to it that you'll hear from marketing and sales, like, hey, this isn't quite working, potentially even from product. But then of course, there's always the metrics. We talk a lot about data today, right? So, is it elongated sales cycles? Is it low win rate? Is it your leads that are coming in, aren't even converting, right? So it's like the MQL to SQL or whatever, metrics you track. And so it's like the conversion rates that Andrea, was talking about earlier, always tell me when it's time to pull out, especially those early stage ones when you're running that controlled experiment early on. If things aren't converting well, then maybe it's time to pull back or, take a look at your strategy again.
Yeah, that's great. And all right, Chris, what do you have to say on this one? When, how do you look as a leader at what's working and what's not and figure out how to reallocate?
Yeah, it's challenging. So we're in a relatively small addressable market in terms of users. So a lot of our growth has come from sort of upsell opportunities, expansion of product, not necessarily just sales and marketing. And what that means is we've had to experiment and try different ways to sell more product to our customers. And in many cases, don't have as much of a luxury for targeting your ICP, your ideal customer profile. We use a term at Build Out. I don't know if this is an industry term, by the way, but we call it spend gates. Essentially, we set up these gates where we'll say, okay, by this time, 6 to 8 weeks from now, here's what we want to see to know if we're going to open up the next gate and then kind of open up that wallet. So there's a sort of a marriage here between that sort of spend to get sort of scenario, but also what are you trying to see over a relatively short time period that kind of open you up for that next investment?
Yeah, that's great. Perfect. And Andrea, how about you? What are you looking at and how do you know when it's maybe time to rethink the strategy?
Gosh, it depends on so many variables, the ASPs, conversion rate, length of sales cycles. It's important to set up your metrics, track those metrics as best as possible. My BI tool, not my BI tool, but the BI tool I talk to, but just, track it. I don't know if I have too much more to add than what the guy said. It was good.
Excellent. All right. Well, I've got one or two from the audience here. Andrea, this one's come up a couple times. And so I'll go bounce back to you here. How did you talked about the specific case where you set a dollar minimum on ARR. How did you kind of come to that conclusion of that dollar amount and fleshing out where that threshold was?
Yeah, we tested it. We started with $5,000 minimum ARR. And we were still it's horrible to say, the bad customers stuck around. And so we knew that needed to be a higher threshold because a $5,000 spend on a kind of startup company that maybe wasn't in our ICP, it's too easy to throw that on a credit card. So we probably kept that around for a few months and then we moved quickly to 10,000. And that was the line of demarcation for many of these companies. Now, if they saw a ton of value because they were in our ICP, they were going to stick around and they were going to make it work and we were going to work with them. But it also is that if they weren't going to stick around, we were not sad to see them go and help our.
And of course, they also those customers that are $5,000 also want the most support, and they need the most hand holding and like everything else
Completely.
too.
Yeah, because it's because what they're trying to do is make a square peg round hole syndrome,
Right.
Yeah.
which
Right.
they're trying to make our solution fit in with their business, and really it's not a good fit. So, yeah.
Yeah. And as you put, it's tough. It requires discipline and it's hard, but the proof is in the pudding in terms of the results for you and your team, that, the success you had doing it. So Excellent. Another question, and Chris, I know you kind of, are living this in real time, and you mentioned, you think about things from both a seller and a buyer perspective, but let's assume an owner wants to sell in 3 years. What are the 3 important factors they should be focusing on in their business today to try to maximize that valuation down the road?
The 3 things that they should be focused on today, I would say, first and foremost, I guess it depends on where you are in the life cycle of a business. Once you're probably over like 20, 25 million recurring, I think you're going to start to sort of see more of that dramatic shift from growth to EBITDA, even more so today. Mm-hmm. So you got to really be thinking about, how are we going to continue on the growth rate that we have here? What options do you have for sort of upsell and cross-selling? So you're probably going to need to add additional revenue streams.
Oh, looks like Chris cut out there for a second. Josh,
I'm going to pick up the back half of that one. Yeah.
Yeah, Josh, I'm going to bounce over. I got one more from the audience for you to bounce over to here. Quite a buzzy word in our industry recently has been product-led growth. To us, that kind of means just the mix of, development and product and incorporating the voice of the customer, into the way that you're selling and vice versa. So what do you think of when you hear product-led growth, and what does it mean to you to kind of bring the entire organization?
If you haven't already, but actually.
Technology.
I can do you a quick favor, Austin. So the person who asked that question, about anonymous attendee in the chat there around the 3 years, I'll answer that one, and I'll get back to PLG in just a second. But
sounds great.
For, since Chris got, just so you froze there for a little bit as we anticipated. I always look at it in cohorts. Like if you can sell in 3 years, that means your first year or 2, you can really focus on driving growth, get the flywheel going, right? Yeah. Spend more money up front on marketing and sales. And then if you're going to sell in your 3rd year, that's when you start to pull that stuff back, because in your year 1 and 2, you ran enough experiments and enough to drive that growth. And maybe even you're spending more on product in those first few years too. And then in your final year, you can start to cut that back up from an EBITDA perspective. These planned hires are starting to come away. So now all of a sudden you drove growth, and now you're driving EBITDA towards the back end of that hole right before you sell.
Yeah.
See it all the time.
Yeah.
So that's definitely a good place. And then when it comes to PLG, oh my gosh, that's like an open door, talking about an entire,
go down the rabbit hole, right?
We could definitely go down a rabbit hole there. I think that one's interesting for me because it's where do you invest your money as a business? Do you do product and R&D, just like we were talking about, or do you do sales and marketing, or a mix? And I think there's a few clues, to take the PLG route, which is, number one is your product low cost and easy to implement? That's number one. The second thing is, does the functionality match up well with an end user versus an economic buyer? The end user is typically your target, for PLG. And the other one is do you need to pass any security protocols or checks? If that's the case, don't go PLG. You cannot do that. And I'd say my last thing is, do you understand your prospects and customers well enough to need to source product feedback and information from them? Right. So if you know your category really well, then you don't have to make all these calls and do voice of the customer, because you can build it out, without them. But those other things up front are really the determining factors. Implementation's easy, it's low cost, you're selling to an end user.
Right. Yeah. No, excellent. That makes perfect sense. All right. Well, one final question here, and then we'll wrap up. And Chris, I'll start with you. And I think that internet was karma for us joking around about you cutting out the last few days. But, a lot of founders and operators are looking for the opportunity in this current market. As a SaaS leader, where do you see the opportunity for companies to go on the offensive going forward, and what makes you most excited?
For me, I think this is about being human. Getting your executives and some of your highest performers in front of customers and prospects, and do it now. building rapport, with your largest customers is absolutely critical. Think about just like the state of the economy. If you're a software business right now, be aware that somebody is looking at your name, your company's name on a spreadsheet, and they're deciding right now whether or not they're going to keep paying you at the end of this contract. And if they've never met you before, the odds are stacked against you. So get on some planes, some trains, some automobiles, shake hands, kiss babies, do whatever you have to do. But make sure that your customers know that you are committed to the long term, that, despite the macroeconomic challenges that sort of everyone seems to be going through, you're going to get through it together. We're going to come out on the other side of this stronger than we were before.
Yeah, no, that's excellent advice. All right, Andrea, how about yourself? What makes you excited and gives you optimism about the next couple years for SaaS businesses?
There's so many great things happening in go-to-market, in particular marketing and different ways to reach your customers or your target audience. I'm really excited about the influencers out there. So there are more and more B2B influencers. And I joke that, isn't it too bad that Kim Kardashian and her millions and billions of followers don't like CAT or PLM? But boy, if she only did. So, find those, but we've done some experimenting with some influencers, and they're not, they don't have these millions of followers, but they have enough, and they are really good. The conversion rates are really good. It's not at a high volume, but when those influencers get the opportunity to play with the solutions, deal with our solutions, create models or do whatever, we get quite a few inquiries about that, or they sign up for the free trials, so we're seeing a difference when an influencer talks about one of our solutions and the people that come to us for trying it out. So I'm really excited about that. So we're experimenting a lot.
I love it. All right, Josh, and let's close out with you. Where's the opportunity and what are you excited about?
This is my it depends answer, and I hate that, but it's true. I think you've only got so many, bets to make each quarter. So I think the first thing you have to ask yourself, similar to like that 3-year question, like, what's your goal? How long do you have, to hit that goal? Are you trying to get investment? Are you trying to build enterprise value? Are you trying to sell your company? And then you have to ask yourself, like, what's going to have the greatest impact during that time frame, that you have, and use a 4-box, right? Like where it's high impact with low effort. And, how much time do I have to complete these projects to get them done? So I think you have to give yourself the time to think about it. Folks like Chris and, a lot of other leaders that I work with spend so much time inside of the business. They don't have the time to remove themselves, from that and actually think about like the 3-year plan, right? 6 months from now, 12 months from now. So for me, it's like, get outside of that, be planful, spend time with your advisors in scenarios that you typically wouldn't. And give yourself time to think.
Amazing. Well, there we go. We've got our marching orders. Sit back and reflect, get Kim Kardashian to furniture for your product and, shake hands and kiss babies. So but thanks, Josh. What an amazing conversation. I'm truly blown away by the insights you guys have. As we're wrapping up, I just want to take a moment to praise the panel. Your experience, your knowledge, and your generosity is so inspiring, and it's what makes me so excited for the future of our industry. To the guests who listened in, thank you for spending an hour of your day with us. We hope you picked up some tips and tricks, and you can put to work in the coming months, and we'll send across a summary, a little 2-pager for you all to kind of use as your cheat sheet going forward. And now at this point, I'd like to turn it back over to Karam to close out the discussion.
That was an outstanding discussion. Thank you, everyone. We'd like to extend our immense gratitude to the panelists. Your insights and experience have been invaluable. We're so grateful for your participation today. And to our attendees, we sincerely value your engagement and participation throughout the discussion today and hope you gained some actionable takeaways from the webinar. For those of you still on, a survey will appear as you leave the webinar where you will have the opportunity to submit any additional questions. Please feel free to take a few minutes to fill out the survey, and we'll do our best to send a response as quickly as possible. We will also be emailing a recording of today's discussion, so please be on the lookout for it. Thank you again, and I hope everybody has a wonderful rest of your week.